Are you someone who is looking to invest in minerals such as gold and silver? If you're planning to start, you might feel overwhelmed because it can be difficult to know what to do first. Some people who want to start something up are often discouraged due to confusion and time constraints. But there is good news. This video can help you start investing in minerals without spending an hour or more trying to find the necessary basic information to boost yourself up. Please consider liking and subscribing, especially if you like this type of content. We always appreciate any kind of support. Note that the ideas and suggestions presented in the video are for informational purposes only. Please consult a certified expert first before making any financial decisions. Welcome to EM3 Financial Freedom Strategies, where you learn how to manage your time and money to achieve financial freedom. If you want to know all the juicy details, then make sure to watch until the end. Step 1. Doing the necessary homework. When people talk about finances online, they always tell others to do your own homework, or DYOR. Of course, this is important to ensure that people who are seeking tips know what they're really getting into. What some people fail to tell is what homework should you be looking at exactly. When it comes to mineral resources, the first thing you should determine is why you're investing in gold, silver, and such in the first place. Other than wanting to be rich, why did this specific asset become your go-to? Why not stocks? Why not real estate? Jot them all down on a piece of paper. If you want, you can even make an Excel sheet or a table in the document to make comparison much easier for you to visualize. Second, you must determine the advantages and disadvantages of investing in mineral resources. This is to help you know if this kind of investment fits your style. For example, if your risk appetite is low, will this investment fit the bill for you? Other than knowing if the investment is for you, knowing the pros and cons can also help you determine if the cons are offset by the pros. If the cons are not big issues for you, then maybe it's a great idea to invest. After you're sure that this kind of investment is for you, it's time to identify your goals. This includes your time horizon. How long are you willing to invest? Other than that, how much money are you targeting? Is this investment realistic for the amount you want? Of course, the number won't be specific at this time, but you can start with a possible range. You should also plan your exit strategy while you're at this point. Lastly, you must know how and where you will invest. You can choose to buy physically, invest in mutual funds, or invest in mining stocks. Investing physically can be expensive because you're going to buy something like gold bars or jewelry. There will be fees when it comes to shipping and possibly storage. If you prefer a lower entry, you might be interested in investing in mutual funds and exchange-traded funds or ETFs, which mimic the commodities market changes. If you're not into those, you can invest in mining stocks. However, you must remember that mining stocks may not always rise in tandem with mineral prices, as mining firms' success or failure depends on how well they operate, how good they are at managing their money, and how high their profits are. Step 2. Identifying the performance of each mineral. For the next step, you'd want to know which mineral performs the best. For instance, let's say your first pick is gold. As always, you'd want to look at its performance over time. How was it 20 years ago? Did it perform well across the years? Other than gold's historical performance, how does it compare with other investments? You can look at its average performance as well when compared to other assets as shown in the video. You must also know if there are current political concerns regarding this asset. Did it show any signs of stagnation in the market? How does gold respond to economic changes? This is not just applicable to gold, but also other minerals like silver and platinum. Step 3. Determining the factors that cause change. Once you're set, the next thing you should know is the factors that can influence the mineral market. First is supply and demand. Is there a significant demand for this commodity? We all know, after all, that the higher the demand and the lesser the supply, the higher the price. Next are the geopolitical factors such as military activity and tension that can affect the price. How about the economic state of the country you're in? Is the economic data for the specific mineral you want in good condition? How about public opinion regarding minerals? Does the market show signs of investors taking out their investments? Other than those mentioned, you must also look at the current development regarding that said mineral. For instance, gold is being used to develop electronic products and medicinal tools. If it has continuous use across time, then it is possible that gold won't lose its value in the near future. Step 4. Getting technical. Doing your homework and keeping up with the news are not enough. You should also be aware of the tools you can use as well as how to use them to perform technical analyses. Technical analysis may be defined in its most basic form as the examination of assets using prior price and volume information. By examining a weekly chart, seasoned gold traders are able to determine the historical trend in gold prices. Like other financial assets in the capital markets, gold prices fluctuate and change. You can evaluate if the price is going to change or stay in a range by utilizing a variety of methods. With such a strategy, you can examine how the price of an asset has changed and how this corresponds with the earlier price trends. Support and resistance levels, trends, volume analysis, and the Relative Strength Index or RCI are a few of the most well-known technical analysis tools that you can use for technical analyses. This part may seem overwhelming at first, but if you are really aiming to get the most value, you should collect as much advantage as you can. Bear in mind, people become successful because they are willing to do what others aren't normally doing. They spend the extra effort to be the best of the best in the market. Step 5. Going pro. As for the last step, it's time to go pro. This means that you'll be handling your emotions. Veteran investors in the mineral market must be aware of market cycles. They don't panic sell or buy on impulse just because they're feeling good at the moment. Not just in this market though, this applies to all investments. If you're aware of the trends while taking time to analyze your possible gains or losses when the market plunges, then you'll be able to get by in the market without buying high and selling low all the time. Hopefully this video helps you come nearer to your goals. Best of luck in your endeavors. As always, you're welcome to share your thoughts and ideas in the comments down below. If you liked our content, then please check out our other videos. Thank you for watching and see you in the next video.